All right. We are back with another episode of the Real Estate Investing Club. I hope you guys are having a great week, great day, great month, whatever day it is for you. As always, it's Friday on the podcast, so we're bringing that great Friday energy to you. This is going to be one of those episodes for you multifamily guys out there. Multifamily, the hottest asset, the most popular asset. I know a lot of you guys like it. So that is what we're going to be talking about on the show today. And we got Michael Root with us to talk about it. Michael is from Root Property Group. They do multifamily out in Chicago. So it should be a good episode. Michael, thanks for hopping on.
Hey, nice to meet you, Gabe.
Absolutely. I told you before we got on here, we always like starting with stories. We like to hear how people got to where they are. So take us back to the beginning of your story in real estate and tell us how you got here.
It was a very clear path for me. Our parents had a small real estate office in Chicago since the early 80s, and they were doing the property management of the handful of 2 to 4 flats that they owned in Lincoln Park and Lakeview here in Chicago. After school, 2005, came straight there. And started trying to figure out how to modernize things and get rid of typewriters and make sure that everyone had email addresses and all that stuff. And I wanted to get into the investment side of it as well. So I kind of wore every single hat I could. My dad would let me. I was the manager. I was the leasing agent. I was the maintenance guy. I was the underwriter. I was the person going to look at buildings with him. And so I have basically worn every single hat in this industry in terms of operations and multifamily management. And yes, it's really the only job I've ever had.
Nice. Well, hey, that is a good background. Your parents were in it; they were in property management, and so that's a nice segue into the industry. Um, as I said, I mean, in the intro, multifamily is one of the most popular assets out there to buy. A lot of investors, when they start with the single family. They start with maybe the home that they moved out of, and they turned it into a rental. They understand that world, and so they're like, "Hey, why don't we just go bigger? Let's buy some more units." Eventually, they reach to the commercial end of that spectrum, and that is multifamily. So let's hop into it. You're in Chicago specifically. Do you guys tell us about what your buying criteria is? What do you guys like to go after?
Core plus, good north side neighborhoods close to our office, close to where we have existing properties, and we know that like operation wise, and we'd be able to handle taking on anything new. In terms of underwriting property, it's way easier to say, I know that I can get the rents in this building, this potential building to X because we have three within 6 blocks of there, three others within 6 blocks of there. Um, so north side, good solid neighborhoods, high credit neighborhoods, value add always. Actually, I shouldn't say that always. That's like changing right now. But historically, value add, it could be heavy value add, light value add with just refreshing kitchens and bathrooms and paint, and then also operations, so property management value add. Those are like the three criterias.
So real quick, when you go through this, a lot of the people that listen to the show, they're new to specific asset types, and so explain the different terminology that you use. You already mentioned core and core plus. Tell people about when you're talking about multifamily. What does that mean from an underwriting criteria?
It's like the asset class. It's the type of the property. It refers to like the location, but it also refers to like the quality of the building. Um, so it's things that you get into and you kind of have like a solid starting ground, whether it's like the neighborhood that it's in or the location that it's at, or you know that it's under rented for whatever reason, but you're coming in at a starting point where you can splash some paint on the wall, put in some new kitchen cabinets and some granite counters, and increase rents by a certain percentage.
Yeah. And I've been, I'm subscribed to a ton of different real estate newsletters, and a lot of them are coming out with articles about multifamily, and they're talking about how the demographic, I mean, the requirements that people are looking for in multifamily has changed over the past couple of years. In terms of they want, I don't know, whatever it is. A lot of it has to do with technology. What are the things when you're talking about value add for multifamily specifically? what are the things that you look for to get the max in the rents, at least for the area that you're investing in?
I mean, I think the number one thing that is the highest response of what would you like in this apartment is in-unit laundry. Following
In
that
unit
is
laundry. Okay.
in-unit laundry, yeah. Following that is like central HVAC. And then following that is just like, the pretty stuff,
Yeah.
the pretty tile, the stuff that looks nice.
That's it's funny you say that because the article that I just recently read that popped into my mind, they were talking about how a lot of multifamily operators, when they look for value add, they try to add things like, Wi-Fi, and I can't remember, just the pretty things that you'd like to have, maybe a nicer gym, a pool.
Yeah.
But the things that tenants actually want are maintenance staff that responds to their inquiries quickly. Things like being able to wash their clothes in their apartment, and that's
Yeah.
not something that a lot of people, when they get into the space, think about. They don't think about the fundamentals when it comes to value add. So it makes sense. I mean, you've been in it for a long time, and it kind of reflects in your experience. Um, when you buy the units, in unit laundry is a big thing. Is that something that you add to units when you buy them, or is it something that you only look for when you actually buy the unit itself?
When we buy the building, if it doesn't have in-unit laundry, but it has the potential to relatively easily install it. There's a closet somewhere, a water source or something. That's probably a good candidate. Um, and it also depends on like the type of renovation. One of the first things I mentioned was heavy value add or light value add.
Mm-hmm.
Heavy value add would be something where you're like reconfiguring layouts,
Yep.
bedroom
Tearing down
sizes.
walls, getting to the
Correct.
studs, that kind of thing.
A light value add may include adding laundry if it's relatively straightforward to do. But that's a decent cost to do that. So it depends on what market you're in. What are the financials of what are the deal? What does the deal look like? If you add that, do you need to add that laundry in order to hit your target rents, or can you just put it in a very nice like common area laundry room in the basement? Um,
Yeah. I would think that if you're adding laundry, I feel like the electrical cost, like getting that, the big ass plug that you need for the dryer, I feel like that would be the most expensive part there. Well, and the plumbing, obviously.
well, in Chicago, we use gas plumbing for the dryer mostly. So
Oh,
it's
okay.
it's yeah. I mean, there's all. It depends on the layout of the unit, but
Yeah.
it can be done.
So another big thing for underwriting, when you're looking at the value you can add for properties, a lot of it comes down to the expenses that the current management is mishandling. They're spending too much here, they're not spending enough here. When you get a P&L for a property that you're underwriting, what are the things that jump out to you that you see? It's a green flag in your mind. You're like, this is something we can add to the value of the NOI of the property by removing it or adding it.
Yeah, I mean it's operational costs. There's some things you can't necessarily change, like taxes or insurance quotes or things like that. But we look for like what are they paying for leasing? What are they paying for? What are they paying their management team? What are they paying in repairs monthly? We try to have our staff is all in house, so we can control a lot of those costs. And just the operations and the way we approach maintenance, which is a big line item in your P&L, is we try to group things together, and we're not sending people out just to do something really small. We'll say, okay, we'll be there next week, and we'll do 8 of those things that came from that one building in one visit.
Yeah,
And as long as your residents know that that's kind of like what your plan is, and they know that you have it scheduled, they're okay with it. You just have to
yeah,
communicate that with
yeah.
them. Otherwise, they'll get impatient.
Yeah, and communication can solve so many, bad feelings that the residents have towards you. Is like you said, as long as they understand what's happening, if they
Mhm.
understand that, you know, whatever, there's a hole in their wall, they accidentally knocked a hole in their wall, can you come and patch it? They understand that'll be fixed at this certain date in the future. They will have less anger towards you, as if, even if you got there sooner, but you just didn't tell them about it, that would make them a little bit more peeved. At least it would make me more peeved. So it makes a
It's
lot
the
of
it's
sense.
the number one thing. It's the number one thing in operations. I think is communication. Because if
Yeah.
if you're not communicating, they think that you're ignoring them and you're not doing anything.
Yeah. And you mentioned like one of the biggest line items in underwriting multifamily is maintenance staff, is having the people that are there, the property management, the maintenance staff, the people that are there addressing the issues at the property. And you also mentioned that you like to bundle properties, get them closer together to get those economies of scale. Is that something that you that you look for when you buy multifamily? You only buy properties that are near to each other. You want maybe a package of 10 unit here, a 30 unit here, a 50 unit here, because they're next to each other, you can get those economies of scale? Or do you buy one-off properties regardless of how close they are together?
We do buy the one-off properties, but we'd be probably more aggressive in our offering if it was something like really nearby something else that we had or a group of properties that we had, just because we would have that economies of scale.
Yeah,
And we know the product better because we have examples nearby.
yeah. So do you guys only buy in Chicago, or do you guys buy outside of that?
It's only been in Chicago. We started looking at north and western suburbs around here, and then we
Mm,
also started looking at some other markets within a 2.5 hour drive of Chicago. Haven't done
okay.
anything yet, but it's stuff we've been talking about.
Yeah. And something that we've had a few guests on in the short term rental space, and they have it's been, I guess, kind of a movement. I don't know what you want to call it, but it seems like a lot of short term guys are looking to approach apartment complexes to rent their units as a short term rental.
Mhm.
And it's something that it's kind of new. It's kind of a fad, and I don't want to say a fad, but a strategy that people are using. Is that something that you do in your complexes? Is that you reserve maybe 1 to 2 units to rent as short term, or are they all long term tenants that you're putting in there?
Vast majority is long term tenants, but we do have a handful of those operators
Mm,
in like specific properties. And a good example will be a building that has like a coach house behind it or something, which would
mm,
be perfect for that. Those operators are definitely like really good at what they do. I'm not personally interested in getting involved in that, but I know that they make a ton of money.
yeah. Yeah, it's an interesting model to approach. Usually you think of short term rentals, a single house, Airbnb, but if you approach multifamily, you can get a bundle of them at once. So it makes a lot of
Yeah,
sense.
yeah.
In terms of the future for you guys, what's on the horizon? What are you guys looking for in the next 3 to 5 years?
We're getting into more. We're getting into more ground up development. Um,
Oh, interesting.
we're getting into, like I said, we're looking at those suburban markets and possibly those locations that are within 2 hours of here, 2.5 hours of here, um, and just scaling up the deal size really.
Mm-hmm.
Um, so I think strategically we try to build by 2 buildings a year. But
Oh,
eventually that might be 1 building a year, but it might be 3 times the size as anything else that we've ever bought. So it's just trying to stay consistent. And one way of doing that is trying to is getting into ground up development because the existing product in the neighborhoods that we like have been very hard to put deals together for recently.
yeah, makes sense. For multifamily, that I haven't heard a lot of guys thinking about development right now. So that's interesting. Tell me more. Why does ground up development make sense to you specifically in your area, whereas in a lot of the areas in the country, people aren't quite looking at that?
Because we're general contractors. We have like
Mm,
all the staff. We know what the costs will be, and we look at the deals that are coming available. And what we're being told by a lot of our investment partners, our capital partners, is they want like cash flow, right?
yeah,
So you look at the deals that come on that are 2000 built, 2022 built, and you look at those numbers and what you can buy that building for, and you can almost on a per square foot dollar amount, I could build it for cheaper than that. And so that's kind of why we started doing that, and we've got a couple of them going right now.
interesting. Okay,
Yeah.
awesome. So So you guys are specifically looking at nicer neighborhoods. It sounds like a lot of people when they get into multifamily, they tend to look at the C class properties, but that has a lot of issues that come with it. You have a lot of turnover. Your lease rates aren't as long, and you tend to have a higher maintenance cost. They're older vintage. They need a lot of repairs. Why do you? for people who are just getting into the space, they're maybe they own a duplex, they own a triplex, and they're looking at the bigger unit numbers. They're looking at the 20s, the 30s, the 50s.
Mhm.
What kind of would you recommend that they look in C class areas, or tell us about what you look for in terms of the location?
Yeah, I think looking at C class locations is great for someone looking to scale up for like the first time getting their first multi unit with 10, 20 units in it. And a reason for that is because you'll be they'll be paying such close attention to it because it'll be their first big deal that they'll, as long as you're paying attention to it and you have like a game plan for it, you can probably execute it pretty well. Just know that like some of the things you're gonna have to deal with are deferred maintenance issues. So make sure you have a good contracting team. You're probably going to have to re-rent the building at some point because you're inheriting the people that live in there right now, and you think you're going to increase their rents. Those people aren't going to accept a renewal offer, so you have to re-tenant the building. So expect 12 to 24 months before stabilization, but after that, you'll probably have pretty nice building on that block.
Nice. All right. Well, hey, I just took a peek at the clock. It looks like we are running it down. We're coming up to that 20-minute mark, so it's time to jump into the quick question round. Are you ready?
Sure.
Let's do it. It starts with education. It could be any form, could be a book you've read, a conference you've been to, a mentorship program you've been a part of. I just need two recommendations, one for general life wisdom and then one for real estate.
General life wisdom, I would say The Fountainhead by Ayn Rand. There's a character in
Nice.
there named Howard Rourke who,
Yeah.
when I get in tough situations, I ask myself, what would Howard Rourke do?
Nice. I used
Um,
to back when I was in college, Atlas Shrugged. I literally read all of Ayn Rand's books, and they were one of my favorite. And Fountainhead is a really good book. And you're the first person, surprisingly, to recommend anything from Ayn Rand, which is surprising because
yeah,
anybody who is who's an entrepreneur or anything, they tend to resonate well with that message. So good
yeah.
recommendation.
I've got two real quick ones on that one. On the real estate side, The Rising by Larry Silverstein, which is he owned the World Trade Center when it got knocked down, and it's the
Oh
story
wow.
of him rebuilding it into one World Trade Center there
Hmm.
today, and the path that he had to take and how challenging it was for him to get it done. So it was just like unwavering dedication to like accomplishing something for a city he loved. And then the
Interesting.
other one is I'm reading right now is called King Icon about Carl Icahn. And it doesn't have to do with real estate, but it has to do with just like a really smart business guy. So that's a
Nice.
very fascinating book to read. Already.
Nice. The Rising. That would be a unique. That'd be an interesting story. I like, and that's I guess an autobiography of sorts. It's the person who did it, who wrote the book.
Correct.
Oh yeah, that'd be good. All right, next question is for your younger self. Let's go back to the Michael who was just watching his parents' property management so many years ago. Go back to him, look him in the eye, give him one piece of advice moving forward.
Buy one building a year. Do not miss a year. Just keep doing it. That's our motto today is two a year. If I've been doing that consecutively since 2005, the portfolio would be totally different.
Yeah, success compounds, and it is crazy.
It
Uh,
right into it.
when you're in the year itself and you only buy one deal, at least for me, if I only buy one deal a year, I just feel like nothing. I didn't accomplish anything. But if you fast forward 10 years down the road, buying 1 to 2 deals every single year, it really has an impact. And yeah, that's a really good piece of advice. All right, next question is about the US. This is kind of unique to you because you are only invested in one city. Generally, I ask, what is the metro you're most excited about investing in today? For you, I'm going to say, what area of the location that you're in the Chicago area, what area are you most excited about investing in?
I mean, my office is in a neighborhood called North Center, and so I love this market. It's got a lot of personality. It's got decent sized apartment buildings. It's right in our backyard, so it's like the easiest thing to operate. Um, so from like a lazy perspective, I would say North Center. But if I could jump into a deal like right now, I'd probably choose something in like I'd do a development in Lincoln Park or try to find a big building in Lincoln Park.
All right. All right, next question is about finding the deal. It all starts with getting in contact with the seller and penning that purchase agreement. So, what is your favorite way to generate leads and find new deals?
The most rewarding way is like starting a relationship with a landlord who's owned a building for a long time, and just saying, "Hey, when you're ready to sell, call me." And then that call comes one day, and you're able to strike a deal. You don't have any competition. That's the absolute best.
Yeah, absolutely. All right, next question is about lessons learned. Not every deal we get into goes the way we expect it. In fact, pretty much every time something is going to go wrong, but that's when we get to learn a lesson. So, what was a deal that went a little bit sideways for you, and then what was the lesson you pulled from it?
Probably has to do with no, I'd actually say it had to do with number of legal units. We didn't really realize this. Total mistake on our part, but it wasn't disclosed or anything. But we got to the closing table and found out that there was actually 6 units less than what we thought there were. So they were
Interesting.
non-conforming units. Um, so we had to fork over more money because the lender wasn't going to, include the income from those 6 non-conforming. So
Yeah. And I think the lesson there is never trust the things that are told to you. If a seller says there's X number of units, trust but verify, I guess is the right way to say that. Because
that's it.
I've
That's
had
it.
that exact thing happen. We buy mobile home parks, RV parks, and I've had people say there's 90 units here, and you go there and there's like 30 of the units aren't usable. I'm just using an example with numbers, but it happens all the time when a seller says something and then it doesn't actually turn out to be true. So good lesson there. Definitely trust but verify.
Sure. Yep.
All right, and that leads us to the next question. We've already talked about the things that go wrong, but sometimes everything goes right. So let's talk about that highlight reel. What is one of your favorite deals?
It's probably the first deal I ever did, 2006. Um, it was the first deal that I ever bought, and it was a 8-unit apartment building, mixed use, with 2 residential lots behind it used as a backyard. It seemed like so much money at the time. It was so much money. But we bought it in 2006, which a lot of people would say that's getting awfully close to, what. I just paid such close attention to that building. Um, Took care of it. We didn't have any issues with it through 2009, 2010. Still own the building today. I've refinanced it like 4 times. It's it's just the best. I love it.
Nice. I like it. All right, that leads us to the very last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a 2-parter. Where can they find you? And then what can they expect when they reach out?
Sure. I would say you can go to our website, which is rootpg.com. That stands for Property Group, Root PG. You can find my page on there, and then my LinkedIn is there. Just send me a message on LinkedIn and say I would put something in there that you heard me on Gabe's podcast, so I know. And then we can set up a time to talk. We can just give you a calendar link and whatever time works for you. And
Cool.
yeah,
All right, rootpg.com. I will put that, pretty easy to remember, but I'm going to put that in the show notes anyways. All you guys got to do, click the little more in the description. It's going to pull down that full description. In there, you can find Michael's links. All right, man, that wraps it up. Thank you very much for hopping on the show.
thank you, Gabe. It's a pleasure.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. If you guys want to support the show, just leave us a review. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.